TheNBI.com. This is John's report. It's for the 8th of December as we get ready to move into the new contract. Back and forth, more of the same, just rolling over. Now we've had the complete retrace back below what we see as the resistance right here at the 4008 range and dipping all the way into the 69 level at this particular stage, but still have a positive extreme from this giant candle right here. That was the breakaway move on that. We see more and more conflicting economic data, and most of it's not good. You can see here with the NASDAQ, I have not corrected the contract rollover. And once those adjustments are made, it affects it because if you've looked at the S&P before, it was much higher. And so then when they do the rollovers, they readjust all the charting and everything to normalize it so that at least you have a consistent look. Same thing happens with stocks, and then after splits and various things, they'll do the same thing. If you go back in like Apple's chart from the beginning, it doesn't make sense because it's like removes down to pennies for some of the trade. Bond market is suggesting literally a collapse kind of scenario here as flows continue to be massive as well as yield dipping, despite the fact the Fed talking about continuing its going. So this is the market saying they don't believe the Fed at all and just are trading accordingly. So it's a very interesting thing. This continued drop of oil, also interesting. Some are saying that there's increased builds because of heightened production and everything, but the other alternative is you're getting that massive a change this quickly, either because of easing global tensions or just the reality is that maybe additional supplies of the Russian crude are going, but the one that no one wants to talk about, significant slowdown in economic activity. It's interesting because that's probability, and that's why some of the other numbers you would use to corroborate that. Because from a supply constraint in that, I mean, Russia's pretty much taken up most of the transport capability and stuff. So where is this excess supply supposedly coming from? And gold remaining high, which if the economy is about to plummet and or the belief is that there's stagflation going to take place, then gold makes sense rising. But otherwise, gold should be plummeting if things have improved that much. So a lot of contradictions built into there. Of course, we talked about why the euro has been on its recent climb and should continue. And from a cryptocurrency standpoint, though, again, I think there's just too many headwinds at this particular stage for anything meaningful. This particular point, the Shika's just not getting any serious impact above the negative 13, which means there just isn't that much of a strong bid for the setup. And we really don't have anything much better for Ethereum as well. So I think there's going to be more difficulties in that space. Of course, got to just see this is what it is when it's unadjusted. It should be down here relative to it, but I have to do the little simple chart correction, and that will do that. From a 5K, I was really quite pretty. We started off with this cascade lower. We dipped below the key level right there around the 57 that we've been revisiting constantly, and just shy of the full move all the way down to the next one, the 38 level. Yeah, slight turnaround, even though red was leading. Once the magenta got over it, flipped everything green. Beautiful run up. Positive extremes throughout the whole second half above the 50% line. And so as soon as, the rollover on the NBI reading started, you still had cyan under red, but you had it within the crossover of the steel crossing below. And for an aggressive move, yeah, you could take that early. You could wait as well, and it would not have been an issue because even if you had waited a couple of bars, but from an exit standpoint, it was the correct place to get out. But from an added shorting, you could wait for the full DOC spread, or particularly even the breakdown in the shakeout. But Pink Bar is pretty successful in marking this, gone through in the past, and regardless of that scenario, was pretty effective. And as you can see, it was. And it moved right back to the exact same algo. They bought that back up. And so what it looks like you've got is a very large player looking for uh, value weighted pricing or AVBOB. And that's why we're trading perfectly within these algo constraints. It's not a coincidence. It never is. And we see it on a regular basis. And so, you buy the dip, sell into the peak, rinse and repeat, and you can acquire quite a bit of whatever you need or liquidate either one. And clean and simple. So a lot of interesting activity. There's a desperation, I think, for some type of push towards the Christmas rally. So it's one of those where you'll read negative news is good news, blah blah blah. It's just you're in positioning, and it's been quite a year, especially when you look at that daily. There's a lot of people looking at significant losses, depending on how they traded for the year, and so there's going to need to be some desire or hope to move the needle in one direction or another. As always, though, trade well. Look for Manscaped Chat. Have a good one.